PDT, we've all heard of it. We've all gone through it. So what is a PDT? So PDT is a pattern day trader limitation that a broker places on your account where, they limit your account for 90 days. Why do they do that? Who made this rule? We're going to learn all about that today here. So PDT, or pattern day trader, is a regulation created by your good old friendly FINRA. So FINRA is an institution agency here in the US which overlooks all the rules and regulations for securities and all that stuff. So pretty much they made this rule so that people without money, like let's say you got a couple $1,000 and they don't want you to go bankrupt or lose all your investment on day trading. So pretty much here's the rule. So you gotta have $25,000 account value. That's number one, right? Without the margins, okay? So you can't count your margin. So you gotta have 25K minimum account value a day before. So yesterday I have to at closing I have to have at least 25K at my account value. So that's one. And number two, once I have that, then I can go and day trade every day. But if I don't have $25,000, what I can do is I can only day trade only 3 times per 5 trading days. So that means I can day trade Monday, Tuesday, and Wednesday, but I can't day trade, okay, for another 1, 2, 3, 4. So another 5 days I cannot day trade. So that really sucks because I cannot, you cannot do, you cannot take full advantage of capturing the market. So how do you avoid it? So a couple of options, okay. Number one, turn your account into cash account. A lot of people don't tell you, but what you can do is you can turn your account, your brokerage account, into a cash account. What that means is that you pretty much have to wait 2 to 3 days till your cash settles down. So for example, okay, let's say you bought, this is going to be random. So let's say you bought a stock worth of $100, okay, and it became, the price went up, you made $200, you sold it. Now, with a cash account, you cannot use that $200 right away. You have to wait 2 to 3 days. Now, with the margin account, you can use that money right now. That's the difference, right? Okay, with a cash account, you do not have the PDT limitation, but you cannot use that cash. So what do you do? So a couple of options. So what you can do is you can divide your money into 2 parts or 3 parts, right? So let's say your account, let's say you got $10,000, right? Let's say you trade $3,000 today, okay, and you made some money and you let that settle, but still have some cash that's settled down, okay? You can use that for those other days. So that's option one. Turn your account into a cash account. That's option number one. Option number two is, of course, you can get a broker overseas, which I don't recommend because sometimes that might not be a great idea, but people do it. Just keep in mind that if you do have a broker overseas, make sure to sweep meaning take your money out every couple days, because you don't want to be left with it where they disappear and you lose out on money. That's why we have a FINRA and all those regulations here, because your broker here in the US, they cannot just disappear with your money, but overseas they can. That's why use it, right? But make sure that you take your money out often. Like I wouldn't trust putting my money there over a weekend. I'll just take it out. That's my deal. So you can do that's the cash account, overseas account, or third one is you can open up multiple accounts. So I don't know if you knew this, you can open an account on Webull, I was gonna say Red Bull, but Webull, Robinhood, Ameritrade, there's a bunch others. So you can open multiple accounts at different places and just day trade on all of them. I would do that. I've done that. And keep in mind that brokers don't talk to each other, so they won't know. So keep that in mind. And PDT is not really illegal. It's just a rules and regulation set by FINRA to protect you. Okay, so it's not illegal. A lot of people think it's illegal when they get a PDT marked on their account. It's nothing illegal. So you got cash account, overseas broker, and you can also go ahead and open multiple broker account. That's how you can avoid it. Now, what to do if you are marked PDT? So a couple of things, okay? Sometimes you can just call up your broker and say, hey, I made a mistake. I'm sorry. Can you reset it? So Ameritrade actually will reset your account 3 times per year. So let's say I got Mark. I traded like boom, boom, boom. I did it, right? And then I got Mark PDT. Now what's gonna happen is I call and say, oh, I didn't know, blah blah blah, and they will reset it 3 times. So your broker does have the power to reset it, okay? And they do that sometimes, okay? Now Robinhood, I haven't had experience, but with TD, I have had my friends, and I used to do it as well. Just call them up and say, hey, sorry, I didn't know, and they will reset it for you 3 times per year. Other brokers do it as well. I just don't know too much about other brokers. I use Robinhood, Webull, and TD, and I'm day trading on TD, but I do know that TD does let you reset it 3 times a year, okay? So now there we go. So you learned what a PDT was, who made the rule, FINRA, right? And the rule is there to protect you. It's not to scam you, or it's not to let poor people or people at the bottom not get to the top. It's not for that. It's just to protect you, because most people lose money on stock market, right? And they just don't want you to lose your couple $1,000 that you have just day trading, because day trading is risky. So there you go. That's PDT for you. And make sure that if you enjoyed this video, make sure to check out my other stock videos and subscribe, because I teach you good things on this channel, and it would mean a lot if you subscribe today. Thank you so much.